Welcome to another edition of the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. We are on location for this recording. I'm at the McCook Farm and Ranch Expo taking place in McCook. It's been a great couple of days on the road and excited to talk to these gentlemen about what's going on in the market trades we've seen this week, including the weakness that we've seen within this soybean market. We'll talk about a cattle on feed report, and like it or not, there's a lot of geopoliticals that we're having to deal with as well. Stick around, more is coming up with this week's episode.
It may be small, but this little bean fuels power. It powers a food industry as a source of protein. It's a fuel that powers diesel engines while reducing emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Well, welcome back once again. As you can see, joining us is Jeff Peterson. Jeff is with Heartland Farm Partners, and David Ericson with Ag Optimus out of Akron, Iowa. And gentlemen, I appreciate both of you joining us. And I wanted to kind of start off with, we haven't done this in a couple of episodes, but give me your one nugget on the thing that kind of caught your attention this week as you looked at the market trade as a whole, grain or livestock. And Jeff, I'll start with you.
Probably the biggest thing that kind of caught my eye this week is just where we've had our strength in the soybeans, but yet we've had some weakness over there in the soybean side. And then also just overall our strength, one additional item, Susan, just overall our strength on the basis side.
And then for you, David, what are some things that you noticed in the trade this week that caught your attention?
Yeah, I would say the biggest thing that caught my attention is to Jeff's point, kind of strength on the basis side, but looking at a completely couple different markets and more on the livestock side of things, when you consider where the feeder cattle are sitting in the feeder cattle index, namely in comparison to the futures, and then you also consider where the lean hog index is in comparison to the lean hog futures. I think that we're in a very extremely strong basis scenario right now. And, we'll have to see what is going to happen in order to bring those two together as we near expiration.
All right. So let's thank you both for those thoughts. Jeff, I wanted to talk about a little bit about this soybean contract with you, because it has definitely had its ups and downs this week. And I know that there was the hope for that push to the higher, which we ended up seeing as it closed, but really kind of a split market action throughout this trading week.
Yeah, we did. We've seen some weakness. It was good to see a little bit of strength in the market as we came into the close today, but over on the bean side. But if you kind of dig in and look at the weakness on the beans, overall, the headwind we have going against us is the funds are continually to be short this market. And what that does for us is that anytime we get a little bit of strength in the market, there definitely is some selling that comes in. Now, a lot of the pressure that's put on the market, it really becomes the fact, if you think about South America, right now, probably pushing over 90% complete on soybean planting, and that's going in better weather conditions. We've got some good rainfall that's fallen, got some good in the 6 to 10 day and 8 to 14 day forecast, got some additional rainfall that looks like it's going to come out that is going to fall. And so that's getting this crop off to a better start than where it would have been. And then in addition to that, we are seeing some weakness on the soybean oil side, which really has been just a follower to what you look for in the weakness that's been out there also in the palm oil market.
David, you and I were talking during the Channel Final Bell on Friday about this corn complex, and obviously it too had its struggles on the week. What was your thoughts on how we wrapped up a Friday trade and just kind of in general how this market looked?
Yeah, the where the corn market is kind of sitting, and Jeff talked a little bit about where the managed money was sitting on the soybean side of things. I think it's been a nice kind of relief that we're seeing a little bit, that we're starting to see the managed money or the funds have some buying interest on the corn side of things, even though that hasn't spilled over into the beans. Kind of a weaker finish to kind of close off the week, but as we did talk about on the channel closing bell there, we're kind of sitting right here on the 20-day moving average. So it's going to be kind of, push is going to kind of come to shove here as we get into next week. Or, are we going to get that push up higher, with another 15, 20 cents, which it kind of looks like, or are we going to take another leg lower and we'll just have to wait and see what next week brings?
Do you have any concerns, Jeff, retaliatory tariffs as China kind of looks at the big picture of a new administration coming in and concerns that they might have come January?
Well, I think that's one of the factors, and I failed to mention that. I think the other thing that is getting priced in on these soybeans is the market's assuming that there's going to be some, tariffs that Trump's going to put in place, and everybody's concerned that there will be some retaliation by China. But as we dig into that, I'm probably not as concerned about that as maybe some others in the trade, and probably the reason for that is I go back to looking at where everything kind of ended with the Trump administration. You think about it, we had tariffs came in place, but we ended with a phase one trade deal that will also open the door to have discussions about a phase two trade deal. But then, along came basically African swine fever, and the hog industry there, and that probably helped China be able to get through and not need quite as much soybean meal as they would have normally. Then we also had COVID coming into play there. And in addition to that, we also had a change in administration. So my thought is that each party, China and Trump, has had a chance to kind of see how each of them are going to approach, trade talks or lack of trade talks. We'll see how that goes. But we know that Trump will lead with the talk about tariff. But my thought is this time, I think everybody will be a little bit quicker to go to negotiations. The other part of that reason is that really the Chinese economy is not as strong as it would have been. The last time we had Trump had been, in the office. As a matter of fact, here just recently, China's talking about putting a stimulus of upwards of $1.4 trillion into the economy just to kind of give it a boost. So I think they're going to be quicker to come to the negotiating table than they would have been last time.
What about you, David? Geopolitical concerns that weigh in. We know China and the tariffs, but then we know from a wheat perspective, we've been dealing a lot with Russia and Ukraine and missile launching, going back and forth like a tennis match.
Yeah, and I really feel like the market probably hasn't paid as much attention to that as it probably should have or should have been, I guess. When this first came about, however long ago that's been now, I lose track of days or what have you, but I remember I was chatting with someone and they said, well, do you really think this is going to have a big impact? And I said, absolutely. I think that it will. And at first it definitely did. And then it just kind of seemed like it got put on the back burner. Even though there was no real resolution that had come to fruition. And, the wheat market has really struggled even with all this going on. And what I find really interesting is when you read through the tea leaves every day, it talks about how Ukraine has upped their production year over year in the wheat side of things, or Russia has increased, whatever the number is. Well, we got to remember the starting point where we're coming from, right? So, we went from a point where we weren't really producing a whole lot or exporting a whole lot over there. And now these numbers, even though they seem very large jumps, and it's a step definitely in the right direction overall, I think they're just a little bit overinflated. So I think that the market has had some pressure on it because of those factors or because of those reasons. But I just don't think that the conflict is really coming to a resolution enough that, we need to stop paying attention to it.
And Jeff, what about everything else that's been happening geopolitical, Hezbollah, Israel, Palestine? I mean, there's just a lot of other things that kind of maybe taken a back burner right now to Russia and Ukraine, but these other wars are still continuing.
Well, they most definitely are. And I think as we dig into that, if you take Israel and Hamas and Hezbollah and Houthis and, Iran, and you look at all that, that probably has a bigger item that could come around and could cause some higher prices in regard to the crude oil market, and we'll have to see. But the one thing that I've noticed is that it does sure seem like when Trump looks like when he comes into office, it looks like Iran is stepping back a little bit. I don't think they're going to be as aggressive, and I don't actually know if we're going to see another retaliatory strike back against Israel, because I think they know that when Trump does come into office, I mean, he won't mess around. We've got a tremendous amount of firepower positioned over there in the Middle East, and whether it be the fighter jets, the aircraft carriers, the ability to launch missiles out of subs, and our destroyers and our B-2, our bombers that we have positioned over there. And the other side of it is that I think Iran also realizes that with Israel, Israel's not going to stop until they physically put some major damage on their nuclear program, especially any part of the nuclear program that could, in the end, end up, get them to a point where they've got nuclear weapons. And so it's still definitely something we got to watch, but it definitely does not give us the headline effect that it did in the beginning.
So let's, as we get ready to wrap this up, we cannot forget that we did have a cattle on feed report that came out on Friday. Some calling it more bearish than they expected. David, what do you think as you look at these numbers that came out?
Yeah, absolutely. I mean, this is a great time to be alive because, we're doing this, right after the cattle on feed report. It'd be like if we were doing this at 11 o'clock on a Thursday when the WASDE report came out, right? But, I would say it leans a little on the negative side. A little more cattle on feed than what the average estimate was. The placement number is definitely, towards the higher end of expectations, and the marketing's number on kind of the lower end of expectations. So, I think that, the biggest thing still remains, and, a lot of people want to talk about the numbers that we have in the cattle markets and, what cattle are available and so on and so forth. And I do think that is important, but I think the biggest headwind, like we talked about earlier, is, this weight situation. We're still running, 29 to 30 pounds above where we were a year ago. So even with our numbers being lighter in the number of cattle that are available, our production level really hasn't dropped off. So, we have prices that are quite a bit higher than they were a year ago, and we have less numbers. That justifies it. But your production numbers are running right in line. So really, we've kind of gotten away with having these prices at higher levels because there hasn't been any pushback from the consumer level. And, that's good. I think until we do get some pushback there, we can kind of hang out kind of in this rarefied air, kind of towards the high end of the historical ranges. But if we do get a little slowdown in the economy, or we do get a little bit of pushback at the meat counter, it could cause a little bit of problems for the livestock industry as a whole.
Well, gentlemen, unfortunately, we have run out of time. This show goes by way too fast. I appreciate you joining us today, David Ericson and Jeff Peterson. A quick reminder to everybody, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's another edition of the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their check.